Hey, what's up, guys? Welcome back to another episode. On today's episode, we're going to be taking a look at a CNBC interview where they're talking about competition coming for Tesla, and we're gonna take a deep dive into that. But before we get started, I want you guys to smash that like button because it's a brand new channel, and that would really help me out if you can hit that like button. So, all right, let's just dive into this interview. Let's take it apart. Let's break it down.
Okay, I want to start with you because no one really expected Tesla to post a profit in this quarter. They did. How did they get there, and do you think that it's sustainable?
Yes, we think they're getting there because they are in such a nascent market right now that something called Wright's Law is at work. And that says for...
Yeah, she's amazing. She's part of an investment group called ARK Invest, the CEO. So she's one of the only, like her company, and what they do is they analyze future companies, mostly like disruptive companies. And the difference between her and other analysts is she takes a look at Tesla, not only in the automotive section, but in the energy section, in the solar section, and in the AI section. So a lot of analysts you hear will be like, oh, Tesla isn't selling that many cars compared to Volkswagen. But they're an analyst that look at just cars. Or there'll be an analyst that looks at just AI, or an analyst that just looks at energy production. So they don't know how to think about Tesla as an overall company with all those things. So yeah, let's keep going.
Every cumulative doubling in units produced, costs decline at a similar percentage rate. In the case of Tesla and the auto industry generally, it's been 15%. So it made a lot of sense to us that the cost of the Model 3 came down by $2,000 per car. That's right in line with what we expected.
So they're becoming more efficient, Pierre, but we did see revenue decline in the quarter by about 8%. Is that concerning for a company?
So they reduced the cost of producing a Tesla by $2,000. Wow, that's amazing.
Company that really, by and large, has traded as a growth company.
Yes, so I think at this point, revenues, like year-on-year revenues or quarter-on-quarter revenue growth really depends on how the ramp-up of Tesla as a manufacturing facility.
New Street Research Managing Partner of Head of Global Tech Research. Okay, I've never seen this guy before, but...
is stacking up, so it's not a big deal. What's really important is the fact that they produce less than 100,000 cars. Their flagship model, where usually all the profits are down from their peak by 40%. And their new high-volume car is barely 1 year old in terms of mass production. And despite that, they print a high-teen gross margin, which is like leading the pack in the industry. And they focus only on electric. And any other car manufacturer will tell you electric is not profitable yet. So that's where they're on to something. That's where the stock is squeezing up. They're on to something, and the street is now trying to figure out what it is.
Okay, yeah, he's totally right about the all these analysts and CNBC and stuff. They look at quarter-to-quarter growth, like, oh, this quarter they're not growing, or that quarter. But he's like, that doesn't matter. All that matters is what they're actually doing. So what they're doing is, despite the Model S and X sales are down by 40%, despite their biggest car, just like despite everything, what they're doing is like turning a profit. So they're turning a profit this quarter, and every other auto manufacturer to produce an electric car, they're taking a loss. Like Porsche, Volkswagen, all these other companies are going to be losing money on every electric car that they make. So, and there's no incentive for the dealerships to sell these cars because they don't make as much. So, and they can't, the maintenance is so low. That's how the dealerships make their money. So if the dealerships were to push electric cars, then the dealerships wouldn't be getting as much money because there's no maintenance, there's no fluid, oil change, brakes. Well, the brakes, very little, but you get what I'm saying. There's not much incentive for them to sell these electric cars. So Tesla is just like on a win-win. They're turning a profit. They're like so ahead in technology. I'm going to keep rambling. All right.
And in terms of the street, obviously we've seen a huge reaction today. The stock up more than 16%, on pace for its best day since 2013.
Yeah, right now the stock is at like
$330. The highest short interest as a
crazy
percentage of float of any company that's out there. About a quarter of Tesla stock is out on loan, in order to be sold short. So how much can we read into today's numbers, Kathy? Is this more of a just unwinding of some of the short positions that we might be seeing?
Sure. I think the shorts, some of the shorts are covering. They're stretching to make a negative case now. They're trying to figure out, is there some accounting gimmickry here that has caused this upside surprise? And as we dig through the accounting and the numbers generally, if you look at the revenue growth year to date, 21%. Unit growth up 65% in an auto industry that is declining. We think total auto sales have peaked.
Yeah,
so this is quite dramatic.
Point, yeah.
And I think the shorts are going to be forced to cover as time goes on.
Well, unit growth is fine, but I thought the point was to create a car that they could make some money on, right? I mean, They keep getting cheaper and cheaper. What does that do to the long-term model? Yeah,
their gross margins surprised considerably, up more than 300 basis points quarter to quarter. We think, and so they're at about 22.8%. If you exclude deferred revenue recognition and credits, it's still up 300 basis points to 19.7. We think that number goes to 30%, could go to 30% in the next year unless Tesla chooses to cut prices faster than they have been cutting them.
So that's great. 30% profit margin is really good. Gross profit margin. So I do Amazon. I sell products on Amazon as well. And what you aim for all the time is about a 30% profit margin. So Tesla's about 22% now, so they're aiming for 30. She predicts that they're going to get up to 30. That's wonderful.
And what's interesting about that is, given its lead in battery costs relative to any other electric car manufacturer, every other one will have to, if they want to keep up with Tesla, will have to sell their electric vehicles at a loss. At the same time, they're losing their internal combustion engine-driven business. So it's quite problematic for the rest of the auto sector.
Who's closest on their tail right now? Is it Volkswagen?
There's no one that's close.
Porsche? Who do you think they see first in the rear view?
No one. They're not even.
I think nobody's close, to be honest.
Exactly.
Tesla introduced in the market the Model S 7 years ago. And today, in what manufacturers have on the road or have announced, nothing is matching the 2012.
So his price target is $530 per share. That's how he thinks it's going to go. Did they show her price target? Because I know a while ago she was saying that her target was like 4,000 a share. No, they didn't show it. They're not showing hers. Hers is really, really high. But
the Model S 7 years ago. And today, in what introduced in the market the Model S 7 years ago. And today, in what manufacturers have on the road or have announced, nothing is matching the 2012 Tesla Model S. And the Model S of Tesla today is actually 40% better than 7 years ago. So that's how Tesla turned from being like a disruptive innovator 7 years ago to actually an industry leader. They have 7 years of experience others don't have, and I don't think anyone is close to them.
And so here's a that Q3 earnings call that Tesla had a few days ago. They released a bunch of notes, and I want to bring this up for you guys. I want to make it big here. Oops, how do I do that? Okay, here we go. So as you can see, here's a little chart of the competition. So you can see the Audi e-tron, Mercedes EQC, and this is the range, right? This is the battery range. So Audi e-tron is new. All these cars are new. Mercedes e-tron is brand new. Jaguar I-Pace is new. Porsche Taycan is brand new. Here's the Model S Standard Range Plus. It's like right in the middle of the pack. And way cheaper than a Porsche, way cheaper than all these cars. Nissan Leaf is pretty on par with the Model 3 Standard Range Plus. The Hyundai Kona, Chevrolet Bolt 2020. And here's what he was talking about. See the Model S 2012? So the Model S 2012 range is about, let's say 270 miles. And that's from 2012. That's 7 years ago, almost 8 years ago. And these guys are coming up with cars in 2019, and they're not even close to the Model S from 2012. That's insane. Why the hell would anyone buy an Audi e-tron when you can get a 2012 Model S that has way more range, way more technology, over-the-air updates? You know the Audi e-tron, you have to go in to the dealership to get a freaking software upgrade. That's insane. That's so ridiculous. A software update. You have to go. It's like your phone, how you have updates. Imagine taking your phone into somewhere to update your phone. Like, that's completely ridiculous in 2019. So here we see the Model S all-wheel drive, the Model X, and the Model S. Like, it's just way ahead. 370 miles compared to the Taycan with like 240 miles. Like, it's just incredible how far ahead Tesla is. No one's even close. The closest would be the Chevrolet Bolt, I guess, but they're not even close. Like, and they're coming out with like new batteries too. So that's, yeah. All right, let's keep going here. Whoops, I went back.
From being like a disruptive innovator 7 years ago to actually an industry leader. They have 7 years of experience others don't have, and I don't think anyone is close to them.
And one other thing I'd add is there's another leg to this story. It's really the most important leg. It's autonomous. And we think that Tesla will be, or is in the pole position to be, the autonomous taxi network here in the United States. The margins, you talk about margins, the margins on a transportation as a service business, they're in the 80s. The
why
gross
is
Wow,
that the case?
80%.
Why are they in the pole position?
Correct.
Yes. So they they're taking a leaf from
Yeah, they
Apple's
made their own
book.
chip.
They've introduced
AI
an
chip.
artificial intelligence chip that, according to our analyst, James Wang, who worked at NVIDIA for 9 years, says is 4 years ahead of any other auto manufacturer's chip, AI chip. And he would know that because NVIDIA's.
Understood.
Okay. They also have 10 to
Understood.
12 billion miles worth of real-world driving data.
So how much? 12 billion, did she say?
12 billion miles,
Billion miles,
worth
okay.
of real-world driving data.
Yeah.
That is more than every other auto manufacturer combined by a multiple. For example, Google's Waymo has somewhere in the 15 to 20 million
Oh my
miles
God,
of
that's not even
real-world
close.
data, not simulated. That's not going to work
Oh,
for
right, because
artificial
they've got it in all these
intelligence.
cars that are out there.
Absolutely.
Yeah.
Yeah, okay. That was amazing. Good job, guys. So, it seems like from a lot of interviews and articles and everything coming out now, it's kind of like the tide is turning. People are starting to see Tesla as like a real threat. And there's another thing she didn't mention is the energy business. Like, as soon as the Solar Roof 3 just dropped, which he wants to start producing now. Like, he wants 1,000 a week to start, 1,000 Tesla roofs a week with the batteries. Imagine every single household has Tesla solar on top and it has the batteries. And he was saying the battery industry is going to be just as big as the car industry. So Tesla is coming in and it's attacking from all angles. The coal industry, the oil, gas industry, the old school car manufacturers, their time is coming and they know it. So they're scrambling, and you might see an influx of negative articles coming at you because of this, because they're going to fight back. They're not going to let Tesla just take over. They're multi-trillion-dollar industry, all those combined, and they're going to fight back. They're going to start putting out more articles, more negative articles, more than ever. And the thing is, even when I'm scrolling through my newsfeed for Google, whatever, I constantly am bombarded with negative Tesla articles all the time. And I think a lot of you guys do this, are seeing the same thing, because that's what happens, right? Like, they're just flooding the market with negative articles. They get way more clicks than positive articles. It's even a tech savvy person like Unbox Therapy. I love his channel. He lives up the street. Amazing. I've been watching him for years. He started a podcast, and so many of the segments that they talk about is Tesla and the negative articles. But I don't think he's not like really into Tesla that often, that much. So he doesn't realize that it's these negative articles are coming from, like, where they're coming from and why this is happening. So to a regular person, it might seem like Tesla is like a terrible company, but the numbers are undeniable. The stock price is undeniable. It's going up the deliveries. It's just insane, and everything is looking up for Tesla. That's gonna do it for today's video, guys. Don't forget to leave a like. Also, I started a Patreon, so if you want to help this channel grow, help me make more videos, it's just brand new channel. Hit that subscribe button. Check out the Patreon link down below. I also sell on Amazon these awesome Bluetooth headphones. They're called Trimo wireless Bluetooth headphones. They're wireless, they're Bluetooth, they last 9 hours on a single charge. The bass is amazing. Definitely check them out. I got a $20 off coupon in the link down below for you guys. So it's only 35 bucks, and they're absolutely amazing. Trust me, they're really good. Yeah, $20 off in the coupon. Subscribe, like, share the video, join the Patreon. All right, guys, I'm out of here. Peace.